Okay, since 3 are there, I'll just quickly do a recap, okay, before the others come in, and then we can start. This was the first slide we saw, if you remember. Introduction to capital and revenue expenditure. I told you that where a revenue item is going to be shown and where a capital item will be shown. That capital items are always shown in the balance sheet, while revenue items are always shown in the trading and profit and loss account to show the true financial position of the business. Capital and revenue items are classified into capital expenditures and revenue expenditures, which I introduced yesterday. Capital receipts and revenue receipts, which we will do today. Capital loss and revenue loss, and capital profit and revenue profit. I had not spoken about deferred revenue expenditure. That also I will be discussing today. Then we had done the next part. What is capital expenditure? Can anyone tell me the important 3 pointers I told you? Zara, what is capital expenditure?
Ma'am,
Okay, Divyata, start.
capital expenditure means the expenditure, the benefit of which cannot be exhausted within a year or the current year. It is for a long term.
It is enjoyed over a long time. First feature is correct. Meet, would you try to tell the next feature?
It is non-recurring.
It is non-recurring in nature. Excellent. Zara, one more point.
Yes, ma'am. Ma'am, all the expenditure incurred to acquire or increase the value of fixed assets which are used in the business for the purpose of earning revenue is called capital.
Can I say that it results in acquisition of permanent asset or increases the value of fixed asset?
Yes,
Okay,
ma'am.
as I told you, like I have a machinery of 10,000 rupees. I bought another new machinery of 10,000 rupees. So a new permanent asset has got acquired. So it becomes a capital expenditure. Yeah. Then we had discussed about the next part. You saw one video, no? I showed you a video on capital expenditure. I think that was the next slide.
Yes, ma'am.
Then we did the features, the basically which were the important types of capital expenditures, like whenever we buy permanent assets or whenever we are spending any money on extensions or on overhauling of a second-hand machine or on, you know, licensing, even on your brokerage. Then expenses for goodwill purpose, to buy shares debentures, for plantations or incorporation of a new company, they all come under capital expenditure. Then the next part we did was this one. One second.
Revenue expenditure.
We did what is a revenue expenditure. Where are the others? I cannot see them, although 2 of them have joined. Who has not joined?
Krishna.
Avani has, and even Muskan has come in. Can I see you both? Where is Avani and Muskan? And Muskan, I can only see one flap picture. Where is Muskan? No one knows.
She was there, now she's gone.
She's just put it on and she's disappeared somewhere.
Might be taking her books.
Krishna has also come in. Okay. Right. So then we discussed about what. Good morning, Krishna. What is revenue expenditure? Since you've said a good morning, we'll start with you only. Krishna, what is revenue expenditure?
Revenue expenditure means the expenditure, the benefit of which is exhausted within the current year.
Guys, don't read. Understand. That's why I sent the lesson yesterday for you. Any expenditure whose benefit is not occurring in many years, but the benefit we are utilizing it only in one particular year or within the current year, that becomes a revenue expenditure. This does not increase the earning capacity of the business. These are expenses of day-to-day nature, which the business has to incur. Okay. And no permanent asset is being acquired. Moment I'm purchasing a fixed asset, it has to come under capital expenditure. Please keep these things in mind. All day-to-day expenses which are of your current needs, like any repair, or purchase of raw materials. They all come under revenue expenses. Okay. Then we did what all can be coming under revenue expenditures. Avni, can you tell these which all were there? Which expenses are included as revenue expenses? Can you tell me?
Ma'am, raw materials,
Raw materials, then?
which are needed for the day-to-day business things.
Yes. Then expenses
And
incurred for upkeep of fixed assets.
fixed assets.
Yes. Expenses incurred on purchase of stock materials. Even depreciation. Whenever assets, we keep on using the assets, they keep on depreciating in value. Their value starts going down with time. So they also come under revenue expenses. Loss, which you're incurring by selling a fixed asset, that is an expense for you. So that will also be shown in the trading and profit and loss account as a revenue expenditure. Is it clear?
Yes, ma'am.
Okay, now one more video, please have a look at it. This we had not, revenue expenditure video I showed you, no? This one I had not shown you, determining
The
capital.
third one.
Third one we had not seen, yes. So let's start. Muskan, are you there? She has just logged in, I cannot see her. I can see Meet, Krishna, Avni, Divyata, Zara, but Muskan I cannot see. Okay, let's start. I'll just do a slideshow so you'll be able to see the video better.
Here are some basic considerations which helps us determine whether expenditure is capital or revenue. 1. Nature of business. Nature of business is a very important criterion in deciding whether expenditure is capital or revenue. Here's a comparison. When furniture is bought by a trader in furniture, it is revenue expenditure. But for any other trader, for example, a hotel or a hospital, it becomes capital expenditure. 2. Purpose of expenses. Expenditure incurred for a major repair of assets so as to increase productive capacity is capital in nature. On the other hand, if it is incurred to maintain the assets in its present operating condition, it is revenue expenditure.
Clear? Did you understand? One second.
Ma'am, they were only telling us about capital and revenue expenditure.
Yeah, that is what. It was just a nutshell video to tell you that what is revenue and what is capital. I think by now the basic idea of what is revenue expenditure and capital expenditure is clear to everyone.
Yes, ma'am.
Okay, great. Then we had gone to this table. I had started yesterday, but we had not been able to complete it. The differences between capital and revenue. This also comes as a 2-marker mostly. Till now, from this chapter, long questions generally do not come, but we do not know. Anytime, anything can, the board rule can anytime change. So, since it is there in the syllabi, we will at least do 5 differences properly. Okay. Number 1, which one results in acquisition of fixed asset, capital or revenue? Capital. And day-to-day business?
Revenue.
Revenue. Which increases the earning capacity of the business?
Capital.
Capital.
Where is the period more than 1 year?
Capital.
Capital. Okay. What about the accounting treatment? Where is capital shown and where is revenue shown?
In capital and revenue in trade account or profit and loss account.
Excellent. What about the nature? Capital expenditure is always
In recurring. Non-recurring.
Non-recurring.
What is the meaning of non-recurring?
Which is not repeated again and again.
Yes. And revenue is always recurring.
Recurring.
Recurring in nature.
Capital expenditure always leads to increase the value of the asset, because whenever I'm purchasing a new asset, my value of the asset is going up. In revenue expenditure, it does not increase to the value of the asset. Okay. Now we are going to do some illustrations which I want you to see. Okay. Illustration. I'm going to ask some questions and you will tell me whether it is capital or revenue. Okay. Are you ready?
Yes,
Yes,
ma'am.
ma'am.
Let's start. Muskan, you'll start with the first one.
Ma'am, just a minute.
The illustration is there. I have put the question on the screen. Just have a look.
Yes, ma'am.
An amount of 5,000 is spent for the incorporation of a company to start business.
Ma'am, capital.
Excellent. Why?
Ma'am, because they are sending it to start the business and it will take time.
Yes, it is paid to acquire a right to carry on a business. Whenever we are incurring an expenditure to start the formation of business, to incorporate a business, it is a long-term affair. And this business is going to give me benefit for many years. So it is capital in nature. Very good. Next one, who's going to try? Krishna?
Yes,
A
ma'am.
sum of 15,000 is spent on the overhauling of a delivery van, of a second-hand
Revenue.
delivery van.
Revenue.
Yes. Why revenue?
Ma'am, because ma'am, because it's a second-hand delivery van.
So what? Second-hand, so what? But it is an asset. It is an asset. Moment I'm spending money to install a new asset or a second-hand asset, and this asset is going to be used for what? For more further increasing the earning capacity of the business. So it will be a capital expenditure. Clear? Okay. Sarah, can you try the third one, whether it is capital or revenue? Look at the entries. Just don't say capital or revenue. Understand what it is saying. Is it for a new machine? Is it for it is relating to an asset? Then it has to be capital. Please understand that. Okay. Sarah,
Capital
300
revenue.
paid as wages for erection of a new machine.
And capital revenue.
Capital. Okay, let's see if you're correct. Yes, 300 for erecting a new machine is capital expenditure because the money was spent to make the asset ready for use. Next one, repair now, costing 600 to carry out on a boiler.
Revenue.
Revenue, excellent. It is a revenue expenditure because it is not adding any profit earning capacity to the business. Okay, Divyata, next one. Annual insurance premium of 34,000 paid for the manager's car.
Revenue.
Revenue is correct because it is a yearly expenditure. The benefit is within the current year. It is not carried out for more than the first year. Next, Avni, huts built at a cost of 12,000 rupees to house the workers. You're giving a house to the workers engaged to construct the factory building. Yes, Avni, what will it be? Capital expenditure. Capital expenditure. Is it now being clear how you're categorizing between capital and revenue? Okay.
Yes, ma'am.
Excellent. Let's do one more illustration to make it even clearer. Okay, let's start. Now, Meet, you're going to tell me the first one. State with reason whether the following is capital or revenue. 7,500 spent on annual whitewashing of office premises. What will it be?
Revenue,
Revenue. Why revenue, Meet?
because it is recurring day-to-day expenses.
Okay, it is yearly basis we are getting the painting done and it is for maintaining the office premises. It is not increasing any earning capacity of the business. Very good. Okay, Divyata, 3,500 paid for repair of a second-hand van purchased recently before using it.
It will be capital
It will be capital. Why?
because a second-hand van is being repaired so that it can be used for a longer period of time.
Excellent. Who's going to try the next one?
Ma'am,
Yes.
ma'am, the second one cannot it cannot be revenue expenditure.
No, because we are repairing this machine to put it for use. You're making the asset ready for use. You're not incurring the expenditure to maintain the asset. Please
Ma'am,
understand
but
the
it will be
difference.
recurring.
No, why will it be recurring? 3,500 I did once I did the repair of this particular van, and now this van is being used for as much time I want. It doesn't mean that every 1 month this van needs a repair. So it's not recurring. Okay.
Okay.
Krishna, 6,700 spent on conversion of a hand-driven machine to a power-driven machine. What will it be?
Capital.
Capital. Excellent. Very, very good. Because it increases the earning capacity of the business. Zara, 5,400 spent on repairing various machines.
Ma'am, revenue.
Revenue. Very good. Because you are maintaining the different machines. Meet 2,500 paid as a legal expense for raising loan and 7,500 spent for issue of capital.
Capital.
Capital. Why capital, Meet?
Ma'am, I didn't answer.
Who answered capital? Avni answered. Okay, why capital or why revenue? Okay, please answer, one of you. Avni, since you have given the answer, please explain.
Because
Why you think it is capital? Okay, let's see first if your answer is correct. It is. So why is it capital?
it is spent for the
See, whenever we are issuing a share, whenever we are raising a loan, okay, whenever you are issuing shares means what? Why am I buying shares for the company? To increase the profits of the company, to increase the earning capacity of the company later on. And even legal expenditures, they come under incorporation of the company. So any expenditure incurred in the formation or incorporation of the company comes as a capital expenditure. Muskan, try the next one. 4,000 pay
Ma'am,
for insurance premium of the office.
ma'am, it will be capital expenditure.
Insurance premium will be capital. Is revenue. I'm paying a premium. Premium generally you pay on what? Yearly basis or on a periodical basis. So it's a recurring expenditure. It is paid
Yes, ma'am.
regularly. So it will be revenue. Okay. So
Yes,
basic idea of what is capital and what is revenue is clear to all.
Yes, ma'am.
You all have any more questions? Should I go to the next part?
Yes, ma'am.
go to the next
Okay, great. Now we come to a new portion of the chapter that is called deferred revenue expenditure. This comes somewhere in between revenue and capital. Okay, how? Now let's understand. Firstly, we are saying, I'm doing, okay, you want to know the page number? It is page number 58.
No,
Meaning
ma'am, I
of
wanted to
deferred.
say that on
On-
page
yes.
number 57, there's one thing given, revenue expenditure treated as capital
We'll come to
expenditure.
it. I'll come to that part. First, I'll explain deferred, then I'll do that. Okay.
Okay.
So, deferred revenue expenditure refers to the revenue expenses. They are revenue expenses, but the benefit of it extends beyond the current accounting year. Till now, we know current accounting year if the benefit is which expenditure it is, revenue or capital. If the expenditure is for the current accounting year, which expenditure it is, revenue or capital?
Revenue.
Excellent. Okay. And whenever there is acquisition of permanent asset, which expenditure it is?
Capital.
Capital. Now, deferred has some feature of capital and some feature of revenue.
It is a hybrid.
Yes, you can say like that. So deferred revenue expenditure refers to the revenue expense, the benefit of which extends over or beyond the current accounting year. But at the same time, it does not result in the acquisition of any permanent asset. Let's say normally an advertising expenditure. I spent 5,000 on advertising. I put it as a revenue expenditure, right? It is a day-to-day expenditure. But if the advertising is a very heavy expenditure, say to introduce a new product in the market, then that benefit you're not only enjoying in the first year, but maybe in the second year, third year. How many of you remember the Dell ad? You know, there was to be this Dell ad used to constantly come on TV for for a very long period of time. Does anyone remember Dell on TV? Okay. So
Yeah.
sometimes what happens is when we are trying to incur a very high amount of expenditure and the benefit is not limited to one accounting year, but it is to more than one accounting year, then such expenditures become deferred. Deferred generally means delayed. The term deferred means delayed for a very long period. So some certain revenue expenses are there whose benefit we do not only enjoy in the current accounting year, but it extends beyond the current accounting year. Such expenditures become deferred in nature. Okay, and the benefit of such expenses is enjoyed by the business over a number of years. Therefore, they should be properly spread over several years. Now, how we are going to treat it in accounting? Portion of it would be debited in the PL account for that particular current year, and the remaining we would treat it like a capital expenditure. So it would be shown as an asset in the balance sheet. Because the benefit is not for 1 year, it is for more than one accounting. Which kind of expenses come under deferred? Heavy advertising expenditures, heavy repairs, small repairs, revenue expense, heavy repairs, deferred expense. Say an expense is incurred to shift a business to a more convenient place. That's a heavy expenditure. I wanted my business is now say in Pune. I want to shift it to Bangalore. So that's a heavy expenditure I have to incur to shift the business from Pune to Bangalore, right? So such expenditures become deferred revenue expenditures. Even research expenses. I'm going to start a new business. Lots of money I put on research, developmental expenses. They come under deferred revenue expenditure. Okay. Now see the
So,
video of
ma'am,
deferred. Yes, tell me, Divya.
when we start a new business, so like most of the the capital we put it comes under deferred revenue expenditure.
It will come under capital expenditure. When you start a business through incorporation, you're investing money into the business. You're buying assets. That comes under capital expenditure. Here
Yes.
we are saying the business, it's a set business. I'm shifting
Okay.
the business from one place to another. So that extra expenditure which you incurred, that comes under deferred revenue expenditure.
Okay.
Clear?
Yes.
Can we see the video on deferred? Okay,
Yes.
let's try. Let's start.
Sometimes expenditure may be revenue in nature, but its benefit is available for more than a year. In this case, the expenditure is spread over the full period of which the benefit is expected to be received. Such expenditure is known as deferred revenue expenditure. The unwritten portion of deferred revenue expenditure is shown on the asset side of the balance sheet under the head Miscellaneous Expenditure. Bulk advertising expenditure for the launch of a new product and discount on issue of shares and debentures are a couple of examples for deferred revenue expenditure.
Understood? Clear?
Yes, ma'am.
Okay. Can we start now? Now the category, this one has capital or revenue. It may even have deferred revenue. Okay. So you have to now see carefully out of which three categories it is going to come. Okay. So let's start. We'll start with Divyata. Old machine purchased for 9,500 rupees. What will it be?
Capital
I'm
expenditure.
purchasing a machine.
Ma'am, can I tell?
Ma'am,
Okay.
it would be capital.
Capital. Okay. Correct. So acquiring of fixed asset. Easy one. Muskan, tell the second one. New
It will
revenue
be,
worth 500 purchased for a typewriter.
ma'am, it will be revenue expenditure.
You're just adding an extension to the typewriter. Sorry. Okay. 1,500 spent on petrol for delivery van. Meet. Third one.
Revenue. Revenue.
Very good. Avani. Advertising expenses of 25,000 incurred for launching a new product in the market.
Deferred revenue.
Excellent. Very, very good. Next, who's going to try? Who's left? Krishna. Delivery van breaks down and 2,500 is spent on its repair.
Capital.
Capital. Delivery van has broken down. We are not purchasing any new asset. Neither we are putting the asset. Should be revenue, correct? Because it is an existing asset. Remember, whenever I said money spent on erecting on a new asset, that time it is capital. Be very careful. A portion of the factory damaged by the earthquake is rebuilt at a cost of 30,000 rupees. What would be this one?
Ma'am, deferred revenue.
Why a factory is damaged by an earthquake and it is
Ma'am, can I tell?
Ma'am,
Yes.
it is a heavy
Ma'am,
cost.
revenue.
It's a heavy repair
Revenue.
cost.
It should be revenue, correct? Because there's no new asset you're bringing. The asset and the factory existed. It has got damaged. So to repair, we are spending money on repairing it. So it will come under revenue, not under capital. Remember, whenever you are building something new, you're buying a new asset, and that asset is increasing your future earning capacity, then it will come as capital. Okay? Okay, let's do the next one then. One more, okay, to make it more clearer, and then I will go to your next part which you wanted to ask. Okay. State with reasons whether the following expenses are capital or revenue or deferred revenue. Okay, let's start. Who's going to say the first one? 1,500 paid for removal of stock to another location for sale.
Revenue.
Who's going to start?
Ma'am, can I tell?
Yes, Muskan.
Ma'am, it is revenue expenditure.
Sure.
Ma'am, it is deferred revenue.
Is revenue expenditure. Why, Muskan? Why you said it is revenue?
Ma'am, it is revenue because maintaining an existing asset. We are
Correct.
maintaining.
It is in the usual. I am just removing the stock. Am I removing the whole business? No. If I would have removed the whole business from one place to another, it would be high expenditure. That would be deferred. I'm just removing the stock from one location to the other. So it is revenue. Come on, Krishna. Advertisement of the shop in a local cinema theater.
Capital.
Capital in a local cinema theater. Advertisement expenditure.
Ma'am, but we are advertising.
Yes. So heavy advertisement expenditures come in what? Heavy advertising expenditure, I just explained. The benefit of it is more than one current year. So it will come under
Deferred.
deferred revenue expenditure. Did not I say? I just explained this part, that anything which is heavy expense and its benefit, normally also advertising would come under revenue, not under capital. Isn't it?
Yes.
Next, 2,500 that is incurred on erection of a temporary panel for an exhibition of the firm's product. Zara?
Ma'am, revenue expenditure.
Revenue. Okay, good. Who's going to tell the next one? Money spent on experimentation of a new product design, but the experiment failed.
Revenue. Capital.
Okay, let's see the answer. Deferred revenue. Why?
Because the benefit is earned in the later years.
Yes, and the burden does not fall on current year's profit. Remember, as I said, every time an expenditure will not increase the earning capacity. Sometimes the expenditure can also fall flat on you, isn't it? I have incurred to start, but I'm incurring a loss. Next one, preliminary expenses.
Second last.
They are research expenses, establishment expenses. So preliminary expenses will come under what? Research developmental expenses come under what?
Deferred revenue.
Correct. Next one, 3,500 spent on replacement of worn out parts of a machine.
Revenue expense.
So clear? I think more or less I've given a full idea of All the three to you. What is capital? What is revenue? What is deferred revenue? Any difficulty anyone facing till now?
No, ma'am.
Clear? Zara, are you understanding?
Yes, ma'am.
Sure?
Yes,
Muskan?
ma'am.
Yes, ma'am.
Okay, great.
Ma'am,
Excellent. Yes, tell me.
can you give an example for deferred revenue? The second point, heavy repairs.
Heavy repairs. Heavy
Yes.
repairs, like say I have spent normally on, say, on repair of an asset, I would spend maybe 2,000 or 1,000 or 3,000 rupees. Suddenly, as I said, I have to certain part has some machine has got damaged and very high amount is spent. That maybe like 30, 40,000 or 50,000 rupees I'm spending. In such cases, those very heavy repair expenses would come under deferred revenue. Okay. Now see, again you have to also analyze that when I'm conducting the repair, the benefit should be of more than one accounting year. Then only it will come under deferred revenue. 2,000 rupees I spent on small advertisement. It will come as revenue expenditure. But advertisement which is done in a local, in a cinema theater, which everyone is seeing on day-to-day basis and whose benefit is for much longer period, that would come under deferred revenue. Okay. Now I clear your doubt, Divyata. You wanted me to do this. Revenue expenditures treated as capital expenditure. We'll be stopping here only today because I don't think so. We just got 8 minutes left. I will be going to capital receipt and revenue receipt in the next class. Okay. Revenue expenditures. Sometimes certain expenses by nature they are revenue, but we may treat them as capital expenditures. What are they? Like normally, whenever I see purchase of raw material, the first thing that will come into mind, it is a revenue expenditure, right? But when these raw materials are used for manufacturing a fixed asset, that time, although they are revenue in nature, they may be treated as capital expenditure. Okay. Similarly, transportation, carriage, freight is what? Revenue expenditure. But if this transportation expenditure is incurred to buy a new fixed asset, we may treat it as a capital expenditure. Third, wages. Wages or salaries paid is always revenue expenditure. But if the wages is paid for the construction of a building, to make an asset or to install a machine, then it may be treated as a capital expenditure. Repair. Normally repairs come under revenue expenditure. But if the expense is incurred to repair a machine that is purchased by the firm to give a future benefit, it may be treated as capital expenditure. Preliminary expenses are normally revenue in nature. But if they're incurred on the formation of a company, they would be treated as capital expenditure. Same way, brokerage is a revenue expense. But if it is paid on the purchase of a fixed asset, it may be treated as capital expenditure. Stamp duty, legal expenses generally come or incurred in connection with acquisition of a fixed asset is capital in nature. But normally legal expenses we would put under revenue expense. Advertising, we've already told you it is revenue or deferred revenue. But sometimes to introduce a new product in the market, it may be treated as capital. So this generally does not come too much in details, but they may ask you, give 2 examples of those revenue expenses which may be treated as capital. Then you can give these. Anything to ask here? Not clear? You want to ask me any question? Tell me. I have done till page number 57, I think. No, 58 I have finished. Now I'll be starting with the next part, that is capital and revenue receipt. That is the next part I'm going to start.
Ma'am,
Yes, tell me.
ma'am, that is not in the scan files you sent me. Receipt and
What is not there in the thing?
ma'am, this scan file you sent me. It
Yes.
doesn't have capital receipt and expenditure.
Revenue. Okay, fine. Then I'll add it. I might have missed it out. I'll just check it. Whatever I had scanned to make my PPT, I had scanned the whole document. So maybe that's how I just sent it to you.
Ma'am,
Tell me.
because it only has still the differences in the capital losses and expenditure losses.
Yeah, so if it has still that much, then it will have the whole thing. 1 minute, I've got the PDF. Just a second. 1 second, wait. 1 second. I'll just share it with you. I've got the PDF with me, which I downloaded. This is the scanned copy. See, this is the one which I did now with you. Okay. Then it does not have deferred revenue, Krishna. It has.
It does have deferred revenue,
Correct.
but like it has
See, this is the one,
difference
capital
between
received
capital.
and revenue received. This I will be doing in the next class. See, check,
Okay, so
must be having this.
yeah.
Okay, then there's capital and revenue losses and capital and revenue profits. And then the chapter is over.